Hello and welcome to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Yatin, you want to introduce yourself?
So, I am Yatin Mota, and I thought that you will probably have some opening comments on the
Because you
markets,
always
and
say
the frame was frozen. So, I thought that there is something wrong in the system.
All right, there's nothing wrong. What's wrong is with the markets because so what's wrong is, with the markets, given the fact that, due to last hour selling,
Yeah.
we did see, the markets, Nifty rather, ending below that 18,300 mark, 18,276 or thereabouts. And what was weighing in on the markets, of course, was the media pack, given the fact that PVR Inox is one stock that hit a 52-week low in today's session. You had the FMCG and metals pack also, clocking in losses. But what was doing well was the PSU banking pack.
Correct.
It gained somewhere around 1% or thereabouts. The realty as well as IT indices were also pretty much in good shape in today's session. If you look at the losers, HDFC Twins weighing heavy on the index, M&M Maruti Tata Motors that
Auto
gained
stock,
yesterday, saw some bit of a profit taking in today's session, and Maruti of course was losing in yesterday's session, extending its losses today as well. Among the top Nifty gainers, you had the likes of Coal India, ONGC of course, given the fact that the government has slashed the windfall tax on domestic crude production to nil from 4,100 rupees per ton. That is boding well for ONGC, Oil India and the likes. BPCL also among gainers, and Bajaj Twins, Bajaj Finserv, Bajaj Finance among the top gainers, and SBI ahead of its numbers this week was clocking some gains in today's session. Yes, Yatin, anything on the mid-cap end?
So, I think the markets, let's address that first. Almost closing at the day's low. Probably, the technical setup indicates that tomorrow also there could be some small gap down, and post which probably we'll review what's really driving the markets. But advanced decline ratio was broadly 1:1 because the mid-cap market were performing. If you look at the mid-caps like the defense pack, be it Mazgaon Dog, HAL, BDL, BEL, all of them were moving in trade. Two triggers, one is the MSCI rebalancing, in which HAL is the inclusion, and also the HDFC Defence Fund, which is currently up with an NFO, and that also could get in some flows in these defense names. We also have the also had the likes of Trident, Hoodco, Birla Soft, which were doing well. In fact, Birla Soft and Astral, these were the two stocks which are top gainers on the FNO market. On the flip side, we had Jubilant Ingreva reported 100 crores of EBITDA versus expectations of 120, 130 crores. That stock was down 6%. Jubilant Pharma also was down. Adani Total Gas, Zensar Technologies were the other losers in the market. But clearly, there was result-specific reaction. And if you look at the large caps, yes, the auto pack and the banking pack from the day's high had some pressure points because of which there was an overall drag on the markets.
Right, clearly last hour selling did see the markets come under a fair bit of pressure today. Well, let's also take a look at some of the stocks that are on our radar this afternoon. Yatin, I'll start with PVR. Do you like watching movies?
So I haven't been to the theater since the COVID times. I prefer OTT. So I've been.
Okay, so you're one of those who are eating into the revenues of some of these multiplex stocks. But on a serious note, PVR Inox reported numbers yesterday, underwhelming set of numbers. Of course, they can't be compared given the fact that PVR Inox merged in the last quarter. So it can't be compared on a YY basis or even a quarter-on-quarter basis. But nevertheless, losses widened. In fact, the company, the stock rather, has hit a 52-week low in today's session. But what's important to note is that Street is pretty much upbeat on this stock, given the fact that the management has given pretty positive commentaries for the coming fiscal. In fact, the management is targeting revenues to the tune of 5,000 to 6,000 crore rupees in FY24, and is looking at maintaining margins to the tune of 18 to 20%. In fact, management has also said that the company plans to add 180 screens in FY24, and even though it has plans to shut down somewhere around 50 screens, given the fact that they are loss making, and it has provided for depreciation of somewhere around 10 crores or thereabouts on that front, and this is that one time hit that has hurt the numbers going forward. But brokerages, as I said, are pretty much positive. They say that Nuvama rather has a very positive outlook over the medium to long term. They have a buy rating with a target price of 2125. It says that improving lineup of Hindi movies and strong pipeline for FY24 is something that will bode well for the stock. You know, given the fact that, you know, we had a few releases this year, starting with Pathan and, you know, Avatar and the like. So it started off on a very good note for PVR Inox. But the thing is that, you know, later on there was a lull, and, you know, Hindi movies have been underperforming, and that is weighing in on some of these multiplex companies as well. But, you know, lack of Hollywood releases is another factor that has kind of contributed to some bit of weakness for some of these companies. But all in all, Prabhudas Leeladhar also has a buy rating with a target price of 2096 or thereabouts. So even though things are looking bleak, but, you know, given the fact that, you know, there's a strong pipeline of Hindi as well as regional movies and of course Hollywood movies as well, looks like picture is very much baki.
Yeah. If you look at PVR, obviously the valuations are rich, and post the merger, let's see how really the synergies also play out. So that will be important for that one. But today's stock in focus was Suryodaya Small Finance Bank. Stock is up nearly 30% from recent lows. Obviously today the stock closed up by only 2%, but before the results there was an anticipated move. If you look at the profits, they reported profit of close to 39 crores, which was a loss of over 40 crores last year. Net interest income went up by 44%, and if you look at the net NPS, gross NPS, there was a significant improvement. If you look at these companies from levels of 250, 300, they have corrected to levels of almost sub 100, now bounced back on the anticipation that results will be good, and the company delivered good results. Now the management expects further momentum in net interest income, as well as you know, the asset quality, which will be on the stable side. So if really the asset quality is stable, these stocks will tend to outperform in the near term, and probably that is what's happening in the microfinance space and the small finance bank space, wherein smaller companies are delivering good results and also generating good returns for investors. So SFB space is something that we'll be watching out for after strong numbers from these smaller banks, including Suryodaya Small Finance Bank.
Right, so these banks and this entire space has been buzzing, and in fact private banks and public sector banks have also continued to, you know, they're back to their rallying days, given the fact that, you know, in the middle we did see a lull after the kind of rally they had clocked in the beginning of the year. But Yatin, what's the other stock on your radar?
So that is Zomato, Nandita, because UBS has come out with a buy rating with a target of 80 rupees. Now, you know, most of us are worried about Zomato because the path to profitability is much ahead. Obviously, the company is focusing on turning profitable X of the ESOP cost. But if you look at the ONDC, which is the open network, you know, which has been introduced by the government of India after Aadhaar, I think this is one disruptor which could be there for the e-commerce space. But what's happening here is that they are getting orders of nearly 25 you know, thousand customers per day, which has resulted into some initial competition assessment. This could be a threat, this could be an opportunity, we don't know, but ONDC has started getting in good food orders and cheaper than, you know, the traditional Swiggies and Zomatos of the world. So let's see how this you know, new network shapes up, and how does this really benefit the consumer, because if discounting widens even for the short to medium term, then there could be again concerns for the profitable growth of both Zomato as well as IPO bound Swiggy.
Right, so they will have to reduce the commissions, which forms a very important part of their revenues. But, you know, there is also this factor of user experience, which is obviously because, you know, Swiggy and Zomato have been in the game for quite some time. So initially even they faced some teething issues, but then they overcame it. We have to see whether ONDC can, you know, come and, you know, come up and get past this initial hiccup of, you know, delivering late food or, you know, stale food for that matter. So that is something that we'll have to watch out for, how the user experience turns out to be in ONDC, and whether they manage to get past these teething issues. Aside of that, Zomato will be reporting its earnings on Friday, if I'm not mistaken. So that stock will of course be on focus, in focus rather. Well, so that's about it. I think we are done for the afternoon. These are the stocks on our radar today. And well, with that, it's a wrap on this edition of Closing Bell. Thanks a lot for watching. But we'll be back with the markets at 8:30 a.m. tomorrow. So don't forget to tune in.